Let's start with the United States, where Amazon has delivered once again for its investors, reporting record earnings over the peak holiday season. Now, the online retail and media giant racked up sales of $137 billion in the 3 months to the end of December. Amazon also said it's raising the price of a Prime subscription in the United States as it faces rising costs, labor and shipping primarily. From New York, Michelle Fleury has more.
Amazon is raising the price of Prime in the United States to $139 per year from $119 for the annual fee. Now, Prime is its subscription service that gives users access to other Amazon services like video streaming. The price for a monthly membership, well, that's gone up too, by $2 in fact, to $14.99 per month. The price hike was meant to address higher costs that Amazon now faces, whether we're talking about shipping to labor to construction. For consumers already grappling with inflation, that's probably not what they wanted to hear. Investors, however, celebrated the news. Amazon's share price surged 15% in after-hours trading. That's despite forecasting lower than expected sales. That's because profits nearly doubled during the crucial holiday period as it managed labor and supply costs, well, better than most. Given that Amazon makes up a large part of the Nasdaq index, we may see a pause now after the deep fall caused by Meta's disappointing results.
Well, let's bring in Natalie Berg. She's the retail analyst and founder of the consultancy NBK Retail. She's also literally written the book, co-author of Amazon, How the World's Most Relentless Retailer Will Continue to Revolutionize Commerce. Well, I wonder, Natalie, will it? Because investors here are obviously pretty happy about, raising the Prime subscriptions. However, I mean, is that going to go down so well with consumers?
Well, I think the Prime subscription fee hike was inevitable, unfortunately, because as you mentioned, the rise in shipping costs, the rise in the cost of labor as well, which has been driven by the labor shortage. And we also have to remember that Prime today is about much more than just shipping benefits. It's about access to an increased amount of digital content and faster delivery. So Amazon has put, free same-day delivery as a benefit for Prime members. But all of this is costly. And I think at the end of the day, shoppers are very wedded to Amazon. Amazon is deeply embedded in shoppers' everyday lives, and I think most won't actually notice the difference.
Okay. Now, 1.6 million people around the world work for Amazon. Kind of staggering, really. Many of whom have been laid off with COVID. And in September, Amazon upped the average starting wage, didn't it, for people? They're also offering signing bonuses and also offering to even pay college tuition in some instances. Can it afford all of this?
Well, that's a really good point. But I think we have to remember that, as you say, Amazon employs over 1.5 million people around the world. They are the second largest employer in the US. And their workforce has grown considerably over the past decade, particularly over the past couple of years, of course, driven by the pandemic, as more shoppers turn to Amazon. It is a challenge for them, like all retailers, along with the global supply chain disruption that we've seen. So, retailers are really feeling rising costs when it comes to, the cost of containers, the cost of fuel, the cost of lorry drivers. Everywhere you look, there's an increasing amount of inflationary pressures that will unfortunately have to feed through at some point to the consumer. We're already seeing that.
Some interesting sort of sidelines going on here. Rivian is an electric truck maker, isn't it? And it's adding quite a spark to these quarterly profits here. And Amazon also disclosing this time around that it's initiated a stake in a self-driving software company called Aurora of more than 5%. Is this all just a little bit random, a bit of a gamble, or is this a sign of things to come?
Well, I think we need to remember that Amazon is actually not a retailer. Amazon is a technology company. And in addition to these types of investments, we're increasingly seeing Amazon reliant on selling its services as opposed to just shifting product. And so if you look at profitability figures, Amazon is hugely profitable now. They reported over $30 billion in net profits, making them one of the most profitable companies in the world. It's taken a long time to get there. They very much played the long game, but they're making money now. And so I think when we look to the future, it's going to be, it's Amazon Web Services, cloud computing arm that continues to be the cash cow. It's the reason why Andy Jassy, who used to head up that division, has now succeeded Jeff Bezos as CEO. But also interesting, we've heard about advertising and of course, Prime subscription fees as well that are playing an increasingly important role in terms of generating both top and bottom line growth.
Okay, Natalie, we're going to leave it there. Natalie Berg in London for us. Thank you.